This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Dan O'Brien, K-State grain economist, and Guy Allen, the senior economist at the IGP Institute at K-State, get today's show rolling with a two-segment grain market outlook. In their first segment, they discuss things happening on a macro level as well as the wheat market. The second segment with Dan and Guy contains their conversation on the corn, grain, sorghum, and soybean market domestically and internationally. A weather forecast from K-State meteorologist Chip Redmond ends the show as he shares with listeners if we are going to continue to see snow in the next week. That and more is coming up ahead. You're tuned in to Agriculture Today, and we start our Friday show with the grain market update with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thanks, Shelby.
As we begin our grain market conversation, I want to first touch on some macro issues we've seen. And Guy, what are those?
Look, as I always like to start off, we'll touch base on the U.S. dollar. U.S. dollar's a bit lower this week. It looks like it could drop below 107. That's off from a high last month when we were trading above 110. So that should lend a bit of support across the commodity complex as we watch that foreign exchange rate. The other thing in the macro area, I just wanted to touch base on dry bulk freight rates. We're looking as we're approaching a 2-year low. On that, we're down to about 776, which that's a good thing that freight's getting cheaper. It helps helps the U.S. commodities compete where we're freight disadvantaged. The downside of that is I think it's a reflection of the poor health of the global economy, because not only is grain, it's an indication of grain exports aren't moving as much as we'd like, but particularly coal and iron ore on that. Surprisingly, U.S. exports have been fairly good as we move forward, even with the absence of China. But that freight index has come down. It's come down to levels when it drops below 1,000. I start to get a bit worried because it tends to be a leading indicator of global economic health. So that just sort of overlays the environment here as we move to talking into the USDA report.
Aluminum and steel had there's tariff activity internationally, so we'll see where that goes in the future.
Yes.
And as we have had our recent USDA WASDE report, talking through our different commodities as we usually do, and looking domestically first at wheat.
Well, the thing that's a surprise this week is domestically is a strong week of exports. We had 21.2 million bushels of wheat actually shipped out this that'd be all U.S. wheat for the week ending February the 6th. And for hard red winter, we had 4.2 million bushels, which is way up from where it had been. We're sitting at about, and hard red spring wheat, 7.2 million. Other classes did well. So we've had an up and down path for wheat. And here in the WASDE report that was on Tuesday, the 11th of February, no change in the U.S. projection for exports of 850 million. But so we have bought right now with 36 weeks, or about 70% of the way through the marketing year. We actually have bought ahead about 83% of the USDA's projection. So that's actually good. When you look at the actual balance sheet for U.S. wheat, again, the macro trends tell the story largely. 2 years ago, the 22-23 marketing year, 30.4% stocks to use, 883 prices. Of course, Ukraine-Russia war really affected that. Then the next year went up to 38.4% stocks to use, 696, still very, very high prices. And now with the wheat stocks to use up to about 39.6%, we're at about 555. So you've got large scale competition happening on the world stage. However, and Guy I'm I'm going to put this on a tee for you to hit, Guy. There's some concerns about different parts of the world in terms of being able to keep up the pace on wheat supply.
Yeah. We'll shift and look at the world situation. Dan's expressing a bit of a concern of world supply. Just want to keep in mind world production was increased slightly by USDA as production was up just over 500,000 metric tons, taking it to just under 794 million metric tons. That's up slightly from a year ago, and that is a record production number. That said, things do appear to be tight in some particularly major exporting countries. We'll sort of run through that. We'll start out here with Russia. Russian production was forecast. It was unchanged. Exports also unchanged. This is for last year, 53 million metric tons. Production was unchanged for this year. However, exports were dropped 500,000 tons to 45.5 million metric tons. That's 10 million metric tons less than last year's record. Sorry, that was a production number. Moving on to Ukraine. Ukraine production forecast is at just under 23 million metric tons, unchanged from last month, but reduced by 500,000 metric tons to 15.5 on the exports. That's 3.1 million metric tons lower than last year. So combined exports out of Russia and the Ukraine are forecast to decline 13.1 million metric tons. And that's what I think is lending some of that support to U.S. wheat exports on that. Moving on to, let's have a quick look at the Southern Hemisphere. Argentina crop was increased just 0.2 million metric tons to 17.7, but they left exports steady. Looking at my friends down in Australia, their crop was unchanged at 32 million metric tons, and exports were steady at 25. So combined, Australia and Argentina, their exports are up 8.4 million metric tons from last year. So some of that we're losing out of the Black Sea will pick up in Southern Hemisphere. Moving north to our Canadian neighbors, they're basically unchanged, production at 35 and exports at 26. Now, the big swing, and that's on the demand side, on the Chinese estimate, it came in unchanged. Keep in mind, China's the second largest wheat producer in the world, 140 million metric tons, but imports were lowered 2.5 million metric tons down to 8 million metric tons. That's a 5-year low. So I've actually been quite happy that the U.S. wheat exports have been at least at the pace that they're at on that. Wheat feeding in China is estimated, it's down to 33 million metric tons compared to 37 last year. That's a drop in 4 million metric tons. So they're tightening up that premium for wheat domestically. World ending stocks dropping slightly to 257.6 million metric tons compared to 258 last year. A little bit tighter. That lent a little bit of support to prices after the report came out, but I think wheat was weighed on by corn and soybeans as we move forward.
Couple things I want to help supplement what you're saying, that when you look at the world wheat situation over the last several years, I know, Guy, you and I have talked a lot about what's happening with world exporters, what's happening with world importers as a group. When you look at the last 3 years for major exporters, 2 years ago, their stocks to use at the end of the year was about 13.9%. So, okay, got that. Then the last year that dropped to about 11.6%. And this year projected to be about 9.85. So supplies for exporters are tightening up. We're not even through that last marketing year. And on the importer side, of course, it's a little more stable, but still declining. You got 53% stocks to use basically 2 years ago, about 50% stocks to use 2 years ago, then 48% this year. So even though the world wheat market's sort of just limping along and not any great shakes, still you've got these key groups that are showing that things are tightening up. And on the overall picture, you still have world minus China stocks 21% 2 years ago, 20.6% last year, 19.5% this year. So I understand we're stable. We're not terribly worried. We don't have a well, we have wars going on, but we're not really worried about what the impact they have at this, apparently, in the grain markets. But we are tightening up in that wheat market, and I just wonder where we'll go in the future. Guy, any thoughts on that?
Yeah, I think you said it there. Where that stocks to use on your major exporting countries is what's tightening up, and that's the concern, because that's where wheat supplies are that are readily available to the market. You can get wheat from those major exporters in 4 to 8 weeks, pretty much anywhere in the world. And when they get tight, that's when we get concerned, and the tank's starting to run down towards the lower side.
As we look at the wheat market right now, and for our wheat growers who have wheat in the ground, how maybe should they be feeling?
Well, I'd use a bit of patience at the moment. I'm cautiously optimistic. I wouldn't necessarily get any hurry to run out and sell some of that. I think corn's actually going to lead that wheat complex, and we'll get into reasons why here in a second. We're getting good moisture across Kansas, particularly here at the moment in the western wheat belt, with in the form of snow and ice and all that good sort of weather we've been having lately. But so that's keeping our production outlook a bit more optimistic.
I think their attitude is, in terms of production prospects, wake me up on March 15th, So then they'll see what they have in the field, and then our domestic issues will come in and impact that. The one thing overall, I know we're spending a lot of time on wheat. When you look at hard red winter wheat and stocks to use, last year we had stocks to use for wheat, and again, for what we grow, hard red winter, 48%. And in this current marketing year, we're projecting 57%. So slower exports so far generally have left us somewhat awash in wheat and hurt our market prospects.
We're cutting to a short break now on Agriculture Today, but when we come back from the break, we'll once again be joined by Dan and Guy as we continue our grain market conversation. You're tuned back into Agriculture Today, and we continue our grain market conversation with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, as we continue our conversation, moving on to corn, and what are we seeing domestically?
There was no change in the supply-demand balance sheet this month. And why? Well, in January, they had the new production numbers out here at the end of March. Still have the February 1st stocks numbers. And so far for corn, we've had really pretty good weeks of exports. Been moving pretty well. And as I understand it, ethanol usage of corn doing decently. In fact, just on a side note on that, Kansas trails Ohio, Indiana, Illinois in terms of the corn price being paid at ethanol plants. And when you look at the drought map, in those areas, it's drier out there. So I think there's probably some aspect to that, where these ethanol plants are trying to get ahead of supplies when they see a dry situation. Point being that pretty strong exports for corn, and we're bought ahead to the degree that we're at 75% of the USDA's projection of 2.45 billion bushels, and with only about 44% of the way through the marketing year, about 23 weeks. So we're doing pretty good. And issues that drive to that, I think Guy will talk on in terms of Argentine dry conditions and some concerns about the second crop corn in Brazil. The only change that did happen in that balance sheet was that they did raise the price of corn from $4.25 to $4.35 for the season average price. And that's just following, I think, what's happened in the futures. And we have had a run up here in late January, have tended to basically bounce around $4.90, up and down that about 7 cents each day for corn. And of the commodities so far here of late, corn has been as strong as about anything, as strong and consistent. Guy, how about on the international side?
Yeah, looking at the international side, I think I'll start off talking about our non-U.S. importers. That was the big number. It was reduced by 2 million metric tons compared to last month. China was the big mover in that, as they dropped corn imports by about 3 million metric tons. Not surprising, they did increase Southeast Asia's imports by about 600,000 metric tons. So they sort of offset there a bit. So our exports here coming out of the U.S. have been quite good when you think that China's been a bit absent from that. Just looking at a couple other situations, Ukraine exports were down 1 million metric tons to 22 million, with an increase in domestic feeding there. No change in Argentina corn exports at 36 million metric tons. That's compared to 25.2 million metric tons. Keep in mind, Argentina was having a significant drought last year, which impacted their summer crop production on that. So we'll keep watching those programs as they go by. On the Brazil situation, interesting to look. It's hard to see any bid offers on a FOB Brazil situation at the moment. And I think there's some logistics and some concerns on just how quick we're going to get that first crop off and to port. But as soon as it's coming, it's about it's a big discount to U.S. corn. I want to say just under $20 a metric ton at the moment once that starts coming to market on that.
And that goes with what you've said so often, Guy, about other countries not being equipped to store grain or to finance the storage of grain or to handle it as well as the U.S. is. So we just by market ability and end up storing more.
Kind of to wrap up the world coarse grain situation, ending stocks were down 2.8 million metric tons to 317 million metric tons. That's now 29 million metric tons below last year. Notable change. Global corn ending stocks were 3 million metric tons lower, down to 290. Yeah. So that's why. And one thing I think is worth mentioning is as corn becomes a bit scarcer, a number of these alternative coarse grains, barley and sorghum, are starting to calculate into the picture, particularly with the absence of China in that sorghum market. We've got some reasonable sales on the books, but they just haven't shipped those. They keep pushing them back. Last 4 or 5 weeks, there's been no actual loadings or shipments of sorghum, and that's really weighed on this domestic basis. I think at the moment now we're 40 to 50 cents below corn price across a lot of areas in Kansas, and that's starting to price it into both the feed ration as well as some of the ethanol plants are starting to pick that up too.
And on that, on corn, just on the feed grain deal overall, you've got major exporters 2 years ago, 7.9% stocks to use. Last year, 6.1% stocks to use. This year projected at 3.3. So that critter's tightening up. On the supply demand balance sheet for grain sorghum, it looks like the USDA, and Guy, see if you agree with this. They saw their export situation was really, really weak. In fact, so they lowered it 50 million bushels, total sales of 46.3 million bushels, 26% of the way to their forecast 175, and they dropped that 50 in that report. Yes. And 44% of the way through the market year. So they're really, really trailing. So when they took that 50 out for sorghum, they said, well, we just got to go somewhere. So they put that over into feed use, food use, and I think they're counting on low price sorghum to compete. Now, what you said may come into play in that if corn tightens up, then here's a bunch of sorghum sitting here available at pretty low price. And if anything, market forces may change this around, but we're waiting for that to happen so far.
The other key thing I think to keep in mind is as China drops their corn imports, keep in mind China's got a 65% tariff on corn imports when it's above the tariff-rated quota amount. And as they drop that down, I think it's 9 million metric tons. If it drops below that, one thing that puts that premium on sorghum, which does not have that 65% tariff going into China, it does have a fairly immediate and direct impact on the sorghum price there as well.
What are we seeing for soybeans?
Domestically, again, no change in the supply-demand balance sheet. The USDA did, if anything, they lowered the projected price 10 cents from 10.20 down to 10.10. You're still sitting at about again 6.1% stocks to use 2 years ago, 8.3 last year, 8.7 this year. And I guess the pace of exports, if I can just mention that real quick, for soybeans here, we're still sitting above an annualized pace, 12-month pace of 18.2 million bushels a week, and had last week 40.5 million. However, our window when we're a price leader before all the supplies really come out of Brazil is rapidly closing. Guy?
Yeah, on the global soybean situation, I'll just talk about the big elephant in the room there is China. USDA left their imports unchanged at 109 million metric tons with their crush at 103. I'd suggest that's probably a bit on the high side. We'll see where those start coming from. A lot of that moving forward is going to sort itself out with the whole tariff situation that's evolving there, and that's changing and evolving every day. Ending stocks globally for soybeans were dropped by 4 million metric tons, and they're 12 million metric tons larger than they were the end of last year. So soybeans were starting to grow some burdensome supplies there, and it'll be interesting to see if price tries to find some demand. Just going back to the tariff situation, one thing I think it's important everybody to keep in mind, I don't think we're going to change that global demand number too drastically. What the tariff impact will be, it'll have an impact on trade flows, and that comes down to freight rates and freight spreads. The soybeans out of Brazil and the U.S. will just go different directions. And as I started off talking about the freight rates, with cheaper freight rates, those comparative disadvantages aren't as great when freight is cheap as they are when they're expensive. So the impact of those changes in trade flows due to tariffs is going to be somewhat minimized.
If I could add in, if that soybean complex of meal and oil, we've continued to have what's a good scientific term? Gangbuster sales in that. Here, last week we had 38.4 thousand metric tons, extremely bullish. You need to pay, and we're actually 671.3 million bought ahead. We're about 92% of the way to the projection, about 730. I guess what I'm stumbling around to say is that the week after week after week, what used to be just anemic soybean oil sales, now because of what's going on in Asia, et cetera, has now just exploded. And I wonder how it's going to come back and affect domestic crush here in the U.S. and affect the balance sheet. Guy, from your experience over in the Asian markets, do you have any thoughts on soybean oil?
Yeah, look, the oil demand's been pretty good. Palm oil, India has actually reached a 14-year low on palm oil imports. They've been substituting a lot of other oils in there as well. I think the key driver in the U.S. is how this biofuels policy is going to sort itself out going forward, because that'll be the big driver of not only biodiesel and vegetable oil demand, but also into the corn market and ethanol, which that's been pretty strong so far.
These tremendous oil exports are competing domestically for oil. And that's an issue. And bioenergy policy being up in the air, we're not exactly sure where renewable diesel, and biodiesel are going to go. So that remains to be seen. That some guidance that in that industry that was intended to come out has been delayed as we try to figure out what the direction will be in terms of energy policy. So if we didn't have this strong vegetable oil demand overseas, we probably have a lot slower movement and some even weaker prices than we have on that.
Dan, Guy, I appreciate you both take the time to join us today.
Thank you very much.
That was K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. We're cutting to a short break now on Agriculture Today, but we'll be right back. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Last week you said all of Kansas was going to see some snow, and did that take place?
You bet. We were expecting to look at widespread 3 to 4 inches with some isolated areas of heavier amounts by the end of the week. And, well, it's the end of the week, and everyone had snow on the ground at some point, and some of the snow is going to melt off pretty quickly today. But, everyone had about 2 to 3 inches of snow. Some of the heavier areas saw 4 to 5. I think I saw one report of 6 inches. But those are pretty isolated, mainly in the northeast part of the state, and then in the northwest as well that saw some 5 inches or more. But a pretty light snow event for most folks. Didn't see really any heavy snow. We did have a little bit of mixed precipitation, a little bit of freezing rain in the far southeast. And then the liquid equivalent was not overly impressive with that snowfall. We look at around 1/10 of an inch, a little over 1/10 of an inch for most folks. So not a lot of moisture in that snow. It was really cold. So we were able to squeeze all that moisture out of the atmosphere. But unfortunately, that means that we just weren't able to get a lot of liquid from it. We did see drought expand this week in the northwest still, as D0 started expanding southward along the Colorado border. And granted, that was before the snow event, but still I don't expect a big change in the drought monitor. So there was some moisture, at least with that snowfall.
Did we see an event where we saw snow, but the skies were clear?
Yeah. So if you pay attention, and we're in northeast Kansas as that snowstorm moved out, we hadn't had snow most of the afternoon, but in the evening, there was just enough moisture in the air as this cloud cover moved out that when that temperature dropped, we were able to squeeze all that moisture out of the atmosphere and formed snowflakes, but like the very start of snowflakes, so they're like little hexagon plates. That's what a snowflake typically starts out as. And then usually it accumulates other snowflakes, and that's how it gets that dendritic pattern, that snowflake pattern that everyone's familiar with. Well, these are hexagon plates, and they fell from the clear sky. So you could look up, you can see the moon and the stars, and it was snowing. It wasn't a lot, but almost like stardust snow. It was very sparkly, very reflective. It didn't accumulate to anything, but it was really neat to see. We also saw some lake effect, too. Northwest winds had increased Wednesday night, and behind that system with those colder air, and that northwest wind aligns with the fetch of both Lake Milford and Untitled Lake, and we actually saw lake effect snow flurries and snow showers south and east of those lakes. So a pretty cool scenario that we only get when the temperatures are really cold. We saw temperatures down into negative 15, negative 16 degrees Thursday morning. So a very cold air mass that was very close to what we saw in January, but much more short-lived, and still not a true Arctic air mass. We just haven't quite seen that.
What are we going to see for the forecast?
Forecast is a bit crazy. So today, Friday, temperature is going to escalate rapidly in western Kansas with some strong southwest winds. They're going to bring much warmer air in. There's going to be a 70-degree temperature difference for folks in southwest Kansas. They were in the negative 10s on Thursday morning, and Friday afternoon they're going to be potentially in the 60-plus range. Temperatures will fall again for the weekend. It will be in the 30s and 20s for highs for the weekend. A light skiff of snow across northeast Kansas on Saturday. And then we warm back up briefly on Monday before the jet stream dips south again. We get another cold air push, and that'll be, of course, with another storm system on Tuesday with another chance of precipitation. This storm system looks like it's going to track a little bit further south and west, so we could see some areas of heavier snow in southwest, south central Kansas. And as that moves off, much colder air again comes in, and very similar to what we saw this week, kind of similar time frame too. Negatives are definitely possible by middle of next week, and it looks like it's going to last a day or two, and then temperature is going to slowly start come back to normal by the end of next week.
Chip, I appreciate you taking the time to join us today and give us our weather update.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.